Hello everyone, welcome to the next session on the GST. GST, as we all know, it is the goods and service tax. The next part we are going to discuss is the composition levy. The composition levy is an alternative method of levy of tax designed for small taxpayers whose turnover is up to 1.5 crore and 75 lakhs in case of few states. The objective of composition scheme is to bring simplicity and to reduce the compliance cost for the small taxpayers. Moreover, it is optional and the eligible person opting to pay tax under this scheme can pay tax at a prescribed percentage of his turnover every quarter instead of paying tax at the normal rate. Here in this composition scheme, the tax is at the concessional rate in comparison to the normal rate of GST. Next is the GST compensation cess. As we have already discussed that with the implementation of goods and service tax, there is a loss of revenue for many states. So there was a dispute in this regard between the center and the state government, and the central government has suggested has included a provision in the GST law that the government will pay compensation to the states for the loss of their revenue for the 5 years from the date of the implementation of goods and service tax law. So some states, particularly the producing states, since the GST is a destination based tax, here the tax will be collected by the consuming state. But in the previous taxation system, the tax was collected by the producing states. So there is a loss of revenue for those producing states. What were those? Maharashtra, Gujarat, Tamil Nadu, Punjab, Karnataka. They are expected to lose tax revenue due to the abolition of the central sales tax. Such states will be paid compensation by the central government for a period of 5 years. To enable the central government to pay the compensation, a GST compensation cess has been levied on the supply of goods or services or both within India and also on the import of goods and services. Under the GST CESS Act, Section 3 to 7, it provides for mode of calculating the compensation payable to the states. Next, another important residual points regarding GST are for the interstate supply, IGST, that is integrated goods and service tax, it will be payable to the central government. For supplies within the state or within a UT, CGST, that is a central goods and service tax, is payable to the central government. And SGST, that is a state, or UTGST, that is a union territory goods and service tax, is payable to the state or respective UT government. The SGST or UTGST acts are copies of the CGST Act. Copies means they have almost the same provisions as that of the CGST Act. Almost all the provisions are identical. Some minor changes are made as per the local ground realities. For certain thin goods like tobacco, cigarette, etc., and for luxury goods like luxury cars and polluting goods like coal, GST compensation tax is collected on importation of such goods. In certain cases, GST is payable by recipient on the reverse charge basis. It means in certain cases, in the case of the reverse charge, the procedure of charge will be reversed. In the normal cases, the GST is payable by the supplier of the goods. But there are certain cases where the tax is paid by the recipient. There can be cases when the supplier is unregistered. So that person will not be liable to pay GST. So in that case, the recipient, if registered, will pay the GST. So the next is the compliance under GST is simplified as the same rules and procedure is followed all over India. Alcoholic and petroleum products are presently outside the purview of GST. Next is the advantages of GST. There are various advantages for the people, for trade and industry, and for the government as well. In case of the citizens, the GST, it is a unified tax. It is a simple taxation system. In the earlier system, there were so many taxes, and that have been unified into the one tax, that is GST. There is reduction of prices of goods and services because the cascading effect has been eliminated. Uniform prices throughout the country, transparency in the taxation system, increase in the employment opportunities. In case of trade and industry, earlier they have to face multiple number of taxes. Now that multiplicity of the taxes has been reduced. There is a mitigation of the cascading or double taxation on the corporate sector, more efficient utilization of the taxes, development of common national market, simple tax regime, as fewer rates and exemptions have been specified. For the center and the state government, the biggest advantage is that they have formed a uniform national common market to boost the foreign investment and the Make in India campaign. It has also increased the export and manufacturing activity for helps in generating more employment, leading to reduced poverty and increased GDP growth, improvement in the overall investment climate, uniform CGST and IGST rates to reduce the incentive for the tax evasion, reduction in the compliance cost, and no requirement of the multiple record keeping. Another benefits are, as we already discussed, there is a creation of uniform national market. There is a cascading effect has been eliminated. Multiple taxes, double taxation has been eliminated. It has given boost to the Make in India initiative. It has increased the government revenue. It saves more money with the consumers. Ease of doing business has been promoted. Easy tax filing and documentation, more employment opportunities that will increase the GDP, reduction in the tax evasion, and more competitive product. The various drawbacks of GST are, since it is totally a technology based system, you need to have a good IT infrastructure. So the businesses, the software which they are already using, they have to buy those softwares that are compatible with the GST. So there is a change in the business software, GST compliance. They have to follow all those provisions, the compliance provisions. It has also increased their operating cost because they need experts for understanding the GST and for compliance of all those provisions. Since all the system is being online, so they have to follow the online procedure. Cloud-based software is required. Higher tax burden for the manufacturing, small and medium enterprises, and there is no since this time there is no clarity on the tax holidays. So there is a kind of confusion among the businesses, especially the small and medium enterprises. In this session, we will discuss up to this. In the next session, we will discuss the rest of the GST provisions. Thank you.